Hello, everyone. The stock market is continuing its uptrend, and even though I wasn't happy with the volume today, the volume was there in the Russell 2000 and NASDAQ, and on top of that, the Russell 2000 led on the day, so that's all I need. Now, however, a close at 1147.79 is going to leave me with a 75% sell today. Until it closes above 1172.40, the rest of this hedge will not come off unless tomorrow is another up 1% day on even higher volume. The NASDAQ is just a few points away at 4240 from new 52-week highs with the 4243 close back in January. So it all looks good with the higher volume. However, once again, my biggest problem is my charts underneath and my scans don't look as nice as they looked throughout the entire 2013 uptrend. And I got to remind everybody, this FLT was a beauty of a stock even before 2012, and while the market trended up in 2012, I didn't have a lot of nice charts. So just because my methodology might not do well here, you might do well if you focus on some of the bigger stocks like SPWR. This is a leading sector stock. I love the stock and the sector that it's in, but this chart pattern is a little choppy for me. I need it to tighten up and break out of possibly a handle before I can go long. And FSLR, nice move off the 200-day moving average, but man, look at the volume. I just wish there was more of a surge, for me to get behind some of these bigger cap stocks. But, it's kind of odd. Look at ILMN. You can see that the earlier breakout in December and even in November was on a below average volume, and then volume picked up. So you really have to focus and be very sharp here if you want to make outside gains, or else you got to continue to trade small. And I do have two new long positions, but first let's go over the sells. DRRX, huge failure. Luckily, the first time that we attempted to get long, the only time that we attempted to get long, from that forward to this 100% sell, we're only going to lose 2%. So that proves the old adage of buying right. And you're not going to really hurt yourself too bad. SRTY, another partial sell. Let's say that you didn't sell any from that day. You're down 13% on the position. From the very first initial signal, we now are down 2%. But like I said, I'm willing to give it to a close below that level. But really, I'm more focused on the Russell 2000 to close to a new above that level back here that I spoke of, 1172.40. So we'll continue to watch that. Also, CAK, a recent long. Technically the stock's still fine, but what a disappointing new long. And this is why I continue to trade small, because previously in 2013, we were doing a much better than what recent longs are doing. And the big caps, if you just look at them, they're not really easy to get on the breakout. I guess this is the buy signal on REGN, but I just don't see the huge volume surge that just makes it confident. You can see BIIB, more or less you got to draw an uptrend line connecting the lows to get long. So this market in 2014 is a little bit more challenging. But we do have two new long signals. ATRC bouncing right off the 50-day moving average on extremely strong volume. There is mutual fund growth. And even though the fundamentals aren't that great, the accumulation in the stock suggests that somebody is really, really interested in the future prospects of this company. We don't risk too much if we are wrong. And then also SCOR, 2% in both of these stocks in all accounts. SCOR, big gap up, has some huge earnings and sales growth, especially in the most recent quarter. Pulled back just barely, and now is starting to resume the uptrend on well above average volume, and it just looks really, really strong, especially blasting out of that base. And a weekly chart just underscores that a little bit more. But everything looks good here. Our model is under a buy signal, basically only in the Dow Jones Industrial Average. Excuse me, I take that back. And the NASDAQ 100, thank you very much. The rest of the model, basically, in which we don't use NASDAQ 100 a lot, but I have to admit, whenever a different index comes into play, we use it because it's leading. So something out there is working. Look at this relative strength line. It's all in the NASDAQ 100 stocks. So you can set buy stops on any of these stocks and trade those on breakouts. But as long as this is an uptrend, this we have a buy signal on. The Dow Jones Industrial Average, the S&P 500, the Russell 2000, and the NASDAQ, these all still remain under a neutral. I need to see breakout to new highs in all these indexes to change the model. Aloha.